Question 1. Which of the following statements best describes the principle of indemnity in insurance contracts? A. Indemnity ensures that an insured will make a profit from a claim. B. Indemnity allows for a claim payment to exceed the value of the insured property. C. Indemnity ensures that the insured is restored to their original financial position before the loss. D. Indemnity limits the insured's recovery to only the actual cash value of the property. Answer. C. Indemnity ensures that the insured is restored to their original financial position before the loss. Explanation. The principle of indemnity in insurance is designed to ensure that the insured is financially restored to the position they were in before the loss without providing any financial gain. The payment made under an indemnity policy cannot exceed the value of the loss. This prevents the insured from receiving more than the actual value of their loss. While indemnity ensures that losses are covered, it does not allow for a profit or exceeding the property's value as stated in the other options. Question 2. What is the primary difference between occurrence-based and claims-made policies in commercial general liability (CGL) insurance? A. Occurrence policies provide coverage for incidents occurring during the policy period, while claims-made policies provide coverage for incidents reported during the policy period. B. Claims-made policies provide broader coverage than occurrence policies as they cover all claims, even those arising after the policy period. C. Occurrence policies cover any claims made during the policy period, regardless of when the incident occurred. D. Claims-made policies provide coverage for claims made during the policy period, regardless of when the incident occurred, while occurrence policies provide coverage for incidents occurring during the policy period. Answer. D. Claims-made policies provide coverage for claims made during the policy period, regardless of when the incident occurred, while occurrence policies provide coverage for incidents occurring during the policy period. Explanation. The key difference between occurrence-based and claims-made policies lies in the timing of the coverage. Occurrence policies provide coverage for incidents that occur during the policy period, regardless of when the claim is made. On the other hand, claims-made policies cover claims that are made during the policy period, irrespective of when the incident actually occurred, as long as it falls within the retroactive date if applicable. This distinction is important for determining coverage, especially in cases where a claim is made after the policy has expired but relates to an incident during the policy period. Question 3. Scenario-based. Mr. Thompson is the owner of a retail business in Nevada. He has purchased a commercial general liability (CGL) policy for his store. Recently, one of his customers slipped and fell inside the store, sustaining injuries. The customer has filed a claim against Mr. Thompson for bodily injury. The policy has a $500,000 per occurrence limit and a $1 million aggregate limit. Which of the following should Mr. Thompson consider when reviewing his CGL coverage in relation to this claim? A. The policy will only cover the customer's medical expenses, but not any potential legal costs or damages awarded in a lawsuit. B. The per occurrence limit of $500,000 will apply to the total damages for the incident, including medical costs, legal fees, and any settlement or judgment. C. The aggregate limit of $1 million will apply, covering the total cost of all claims made during the policy period, including this particular incident. D. The CGL policy will cover the bodily injury claim, but the damages will be paid in installments over a period of time as determined by the insurance company. Answer. B. The per occurrence limit of $500,000 will apply to the total damages for the incident, including medical costs, legal fees, and any settlement or judgment. Explanation. In a commercial general liability (CGL) policy, the per occurrence limit refers to the maximum amount the insurer will pay for each individual incident, which would include both the medical expenses and any associated legal fees or settlements arising from the claim. The aggregate limit, on the other hand, is the maximum amount the insurer will pay for all claims made during the policy period, and it is not specific to an individual claim. Therefore, in this scenario, the per occurrence limit applies to the incident. The claim will be covered up to $500,000, subject to the policy's terms and conditions. Question 4. Which of the following best describes how an employer's workers' compensation premiums are affected by the company's safety record and the experience modification rate (MA)? A company with a poor safety record will have a lower E/MR, resulting in higher premiums. B. A higher E/MR indicates a better safety record, leading to reduced workers' compensation premiums. C. A lower E/MR indicates a better safety record, resulting in low premiums. D. The MR does not impact the premiums for workers' compensation coverage. Answer. C. A lower E/MR indicates a better safety record, resulting in low premiums. Explanation. The experience modification rate (EMA) is used to adjust a company's workers' compensation premiums based on its safety record. A lower EMR indicates that the company has had fewer claims and a better safety record compared to others in the same industry. As a result, the company will benefit from lower premiums. A higher EMR, which indicates a history of more claims or accidents, results in higher premiums. The MR is an important factor in determining the cost of workers' compensation insurance for businesses. Question 5. Which of the following best describes the coverage provided by a commercial auto policy for physical damage to a business vehicle? A. Physical damage coverage only covers damage caused by accidents with other vehicles. B. Comprehensive physical damage coverage applies only to damage caused by theft. C. Collision coverage applies to damage resulting from an accident with another vehicle, while comprehensive covers damage from non-collision incidents. D. Physical damage coverage under a commercial auto policy is excluded if the vehicle is used for business purposes. Answer: C. Collision coverage applies to damage resulting from an accident with another vehicle, while comprehensive covers damage from non-collision incidents. Explanation: in a commercial auto policy, physical damage coverage includes both collision and comprehensive coverage. Collision coverage applies to damages caused when the insured vehicle collides with another vehicle or object, regardless of fault. Comprehensive coverage applies to non-collision incidents, such as theft, vandalism, fire, or damage caused by falling objects or natural disasters. These two types of coverage provide broad protection for business vehicles, unlike the options that narrow coverage based on specific causes. Question 6. Scenario-based. Sarah owns a chain of retail stores in Nevada and has a commercial property insurance policy in place. The fire breaks out in one of her stores, causing significant damage to the building. The fire department's efforts to extinguish the fire result in extensive water damage to the structure and inventory. Sarah's policy includes coverage for building and personal property, coverage A, business personal property, coverage B, and debris removal. How would her insurance policy respond to the damage caused by the fire and water? A. Coverage it would cover the fire damage to the building, but coverage B would not cover any of the water damage. B. Both coverage A and coverage B would cover the damage, but only coverage A would apply to the fire, while coverage B would cover the inventory. C. Debris removal coverage would not apply to the water damage, but it would cover the cost of removing the remnants of the fire-damaged materials. D. Coverage A, coverage B, and debris removal would all cover the fire and water damage, including the cleanup of both fire and water-related debris. Answer: D. Coverage A, coverage B, and debris removal would all cover the fire and water damage, including the cleanup of both fire and water-related debris. Explanation: in commercial property insurance, coverage A typically covers physical damage to the building caused by fire or other covered perils. Coverage B covers damage to business personal property, such as inventory from similar incidents. Debris removal coverage would apply to both fire and water-related debris, covering the cost of removing debris after the fire or water damage. In this scenario, Sarah's policy would cover all the damages from both the fire and the water damage caused by firefighting efforts, including cleanup expenses. Question 7. Which of the following best explains the purpose of a commercial umbrella policy in the context of liability coverage? A. A commercial umbrella policy provides additional coverage for all types of property damage, but not for liability claims. B. A commercial umbrella policy provides coverage that extends beyond the limits of underlying policies, such as general liability or auto insurance, to offer additional protection. C. A commercial umbrella policy replaces the need for primary insurance coverage by providing higher limits. D. A commercial umbrella policy only covers personal injury claims and excludes property damage liability. Answer: B. A commercial umbrella policy provides coverage that extends beyond the limits of underlying policies, such as general liability or auto insurance, to offer additional protection. Explanation: a commercial umbrella policy is designed to provide additional liability coverage beyond the limits of an underlying policy, such as commercial general liability (CGL) or business auto insurance. It acts as an extra layer of protection, helping to cover claims that exceed the primary policy's limits. This policy is particularly useful for businesses with higher exposure to risk, offering an extra buffer in case of large claims or lawsuits. It does not replace underlying coverage, but extends it to ensure comprehensive liability protection. Question 8. Which of the following statements is true regarding the exclusions in a commercial property insurance policy? A. Commercial property insurance covers all forms of damage, including those caused by natural disasters such as earthquakes and floods. B. Pollution damage is generally excluded from commercial property policies, and specialized coverage must be purchased separately. C. Damage caused by normal wear and tear is always covered under commercial property insurance. D. Commercial property policies always cover damage from nuclear accidents without additional endorsements. Answer: B. Pollution damage is generally excluded from commercial property policies, and specialized coverage must be purchased separately. Explanation: most commercial property insurance policies exclude coverage for pollution-related damage. This includes damage from environmental contaminants, such as hazardous materials. To cover pollution damage, businesses must typically purchase specialized environmental liability insurance or endorsements to their property policies. Other exclusions, like those related to earthquakes, floods, wear and tear, and nuclear accidents, may also apply depending on the specific terms of the policy and the need for additional endorsements or policies. Question 9. When a business purchases a commercial crime insurance policy, which of the following coverages is most likely to be included? A. Coverage for employee theft and dishonesty, but not for theft by customers or outsiders. B. Coverage for theft by employees, but it excludes losses related to external robberies or burglaries. C. Coverage for employee theft, forgery, robbery, and computer fraud, protecting the business from internal and external criminal activities. D. Coverage for personal property theft, but not for any business-related losses or theft from employees. Answer: C. Coverage for employee theft, forgery, robbery, and computer fraud, protecting the business from internal and external criminal activities. Explanation: commercial crime insurance policies generally cover a broad range of criminal activities, including employee theft, forgery, robbery, burglary, and computer fraud. This coverage helps protect businesses from both internal risks like employee dishonesty and external threats such as theft or fraud committed by outsiders. The policy is essential for businesses to safeguard against losses due to criminal activities and typically covers losses related to both tangible and intangible assets. Question 10. Which of the following is typically NOT covered by a general liability insurance policy? A. Bodily injury to a third party on the insured's premises. B. Damage to the insured's own property. C. Property damage caused by the insured's business operations. D. Personal and advertising injury caused by the insured. Answer: B. Damage to the insured's own property. Explanation: general liability insurance covers third-party claims such as bodily injury or property damage to others. However, it does not cover damage to the insured's own property. Damage to the insured's property is usually covered under commercial property insurance or specific property coverage policies. Question 11. Which type of insurance would typically cover a business for the cost of replacing lost or stolen equipment, tools, or inventory? A. Business interruption insurance. B. Workers' compensation insurance. C. Commercial property insurance. D. Cyber liability insurance. Correct answer: C. Commercial property insurance. Explanation: commercial property insurance covers the physical assets of a business, including equipment, tools, and inventory. It provides protection for losses due to theft, fire, vandalism, or other covered risks. Business interruption insurance, on the other hand, covers the loss of income due to covered events that disrupt business operations. Question 12. Scenario-based. Jennifer owns a bakery and purchases a commercial property insurance policy with coverage for both her building and business personal property. A fire breaks out in the kitchen and damages the equipment, inventory, and some of the building's structure. Which of the following will her commercial property insurance cover? A. Only the damage to the building structure. B. The damage to the inventory and equipment, but not the building. C. The damage to the building, equipment, and inventory as long as the fire was accidental. D. The damage to the building structure only if it was caused by the bakery's operations. Answer: C. The damage to the building, equipment, and inventory as long as the fire was accidental. Explanation: a commercial property insurance policy generally covers damage to both the business's building and business personal property, equipment, inventory, etc. due to covered events such as fire. If the fire is accidental, the policy would cover both the structure and the property inside the building. However, exclusions may apply depending on the cause of the fire. Question 13. Which of the following is typically excluded from a standard commercial general liability (CGL) policy? A. Third-party bodily injury on the insured's premises. B. Property damage caused by faulty workmanship. C. Personal injury claims due to advertising. D. Liability for injuries caused by defective products. Answer: B. Property damage caused by faulty workmanship. Explanation. A standard CGL policy excludes coverage for property damage resulting from faulty workmanship. This is because faulty workmanship is generally considered the responsibility of the contractor or business performing the work. Coverage for such incidents may require a separate policy, such as professional liability or product liability insurance. Question 14. Which of the following scenarios would most likely trigger a business interruption insurance claim? A. The business is sued for libel. B. A storm causes severe damage to the business's physical location. C. The business hires new employees and needs to cover the additional payroll. D. The business changes its location to expand operations. Answer. B. A storm causes severe damage to the business's physical location. Explanation. Business interruption insurance covers the loss of income when a business is temporarily unable to operate due to damage from a covered event, such as a storm or fire. This insurance helps businesses cover operating expenses, including payroll and rent, during the period when the business is unable to function. Question 15. A company has an employee benefits liability policy that includes coverage for errors or omissions in administering employee benefits. Which of the following situations would most likely be covered by this policy? A. An employee sues the company for wrongful termination. B. An employee's claim for healthcare benefits is denied due to an administrative mistake. C. The company is fined for not providing health insurance under the Affordable Care Act. D. The company is sued for harassment by an employee. Answer. B. An employee's claim for healthcare benefits is denied due to an administrative mistake. Explanation. An employee benefits liability policy provides coverage for errors and omissions in the administration of employee benefits programs, such as health insurance, retirement plans, or disability benefits. If an administrative mistake results in an employee being wrongly denied benefits, this policy would provide coverage for the company's legal costs and potential settlement. Question 16. Which of the following is true regarding an umbrella liability policy? A. It covers damages not covered by the primary insurance policies. B. It provides coverage only for property damage claims. C. It covers losses from both business and personal claims. D. It replaces the need for general liability and auto liability policies. Answer A. It covers damages not covered by the primary insurance policies. Explanation. An umbrella liability policy provides additional coverage above and beyond the limits of primary policies like general liability, business auto, and employer's liability. It helps cover claims that exceed the limits of these underlying policies or provides coverage for situations that may not be covered by them. It does not replace the need for primary insurance but extends protection. Question 17. What type of insurance would be most appropriate for a business that manufactures and sells products to protect against claims arising from product defects that cause harm or damage to others? A. General liability insurance. B. Product liability insurance. C. Professional liability insurance. D. Workers' compensation insurance. Answer. B. Product liability insurance. Explanation. Product liability insurance is designed to protect businesses against claims arising from defects in the products they manufacture or sell. If a product causes injury or damage to a consumer or property, this coverage helps pay for legal costs, medical expenses, and potential settlements. General liability insurance may also offer some coverage, but product liability insurance specifically addresses these risks. Question 18. Which of the following is typically not a factor considered when determining the premium for a commercial auto insurance policy? A. The type of vehicle used for business purposes. B. The number of employees driving the vehicles. C. The location where the business is based. D. The age of the business owner. Answer. D. The age of the business owner. Explanation. When determining the premium for a commercial auto insurance policy, factors such as the type of vehicle, the number of employees who will be driving, and the location of the business are considered. The age of the business owner is typically not a factor in determining the premium, as the focus is on the vehicle's usage and risk exposure related to business operations. Question 19. Scenario-based. Mike owns a small plumbing business and has purchased a workers' compensation policy for his employees. One of his workers, John, injures his back while lifting a heavy pipe at a job site. The injury is severe enough to prevent John from working for several weeks. Which of the following is true regarding Mike's workers' compensation insurance? A. The policy will cover John's medical expenses, but not his lost wages. B. The policy will cover both John's medical expenses and a portion of his lost wages. C. The policy will not cover John's injury because he was lifting an item that was too heavy. D. The policy will only cover John's medical expenses if Mike provides evidence of the injury. Answer: B. The policy will cover both John's medical expenses and a portion of his lost wages. Explanation: Workers' compensation insurance provides benefits for employees who are injured on the job, covering medical expenses and lost wages. In this scenario, since John was injured while performing work-related duties, the policy will cover both the medical costs for his back injury and a portion of his lost wages while he is unable to work. Workers' compensation is a no-fault system, meaning the employer does not need to prove negligence. Question 20. Which of the following is a key difference between professional liability insurance and general liability insurance? A. Professional liability insurance covers bodily injury claims, while general liability insurance does not. B. Professional liability insurance covers claims related to errors or omissions in professional services, while general liability covers general business operations. C. General liability insurance is more expensive than professional liability insurance. D. Professional liability insurance is only for businesses that provide physical products, while general liability applies to service-based businesses. Answer: B. Professional liability insurance covers claims related to errors or omissions in professional services, while general liability covers general business operations. Explanation: Professional liability insurance, also known as errors and omissions insurance, protects businesses that provide professional services from claims alleging negligence, mistakes, or omissions in the performance of those services. General liability insurance, on the other hand, covers claims arising from bodily injury, property damage, and other general risks associated with business operations. Question 21. Which of the following is typically covered under a business owner's policy? BOP. A. Personal auto insurance. B. Employee theft. C. Cybersecurity breaches. D. Loss of income due to flooding. Answer: B. Employee theft. Explanation: A business owner's policy (BOP) is a comprehensive insurance package that includes general liability, commercial property insurance, and business interruption insurance. Employee theft is typically covered under a BOP, but flooding or cybersecurity breaches would generally require additional or specialized coverage. Question 22. Which of the following would not be covered by a commercial property insurance policy? A. Damage caused by fire. B. Theft of business inventory. C. Flood damage to the building. D. Vandalism of business property. Answer: C. Flood damage to the building. Explanation: Flood damage is typically excluded from standard commercial property insurance policies. To cover flood damage, a separate flood insurance policy is usually required. Fire, theft, and vandalism are generally covered under commercial property insurance. Question 23. Scenario-based. A contractor's employee accidentally damages a customer's property while working on a construction site. Which type of insurance would most likely cover the repair costs for the damaged property? A. Commercial general liability insurance. B. Workers' compensation insurance. C. Umbrella insurance. D. Commercial auto insurance. Answer: A. Commercial general liability insurance. Explanation: Commercial general liability (CGL) insurance covers third-party property damage caused by the insured's business operations. In this scenario, the contractor's CGL policy would likely cover the cost of repairing the customer's property damaged by the contractor's employee. Question 24. Which type of coverage would provide financial protection if a business is sued for negligence related to the design or quality of a product they manufacture? A. Product liability insurance. B. Professional liability insurance. C. Workers' compensation insurance. D. Commercial auto insurance. Answer: A. Product liability insurance. Explanation: Product liability insurance protects businesses from claims arising from defects in the products they manufacture or sell. This includes claims related to design flaws, manufacturing defects, or inadequate warnings that result in injury or damage. Question 25. Which of the following is an example of a peril typically covered under a commercial property insurance policy? A. Cyber attack. B. Earthquake. C. Burglary. D. War. Answer: C. Burglary. Explanation: commercial property insurance typically covers perils such as fire, theft, and burglary. Earthquakes and cyber attacks are often excluded from basic policies, and war-related damages are typically not covered under most commercial insurance policies. Question 26. What is the primary purpose of a surety bond in the context of a business? A. To protect the business from employee theft. B. To guarantee the completion of a contractual obligation. C. To cover damage to business property. D. To protect a business from the risks of natural disasters. Answer: B. To guarantee the completion of a contractual obligation. Explanation: a surety bond is a three-party agreement that guarantees the completion of a contract or obligation by one party, often a contractor. If the contractor fails to fulfill the agreement, the bond ensures compensation to the other party. It does not provide coverage for employee theft or property damage. Question 27. Which of the following would likely be covered by an umbrella liability policy? A. A lawsuit arising from a car accident involving an employee driving a company vehicle. B. Bodily injury caused by an employee at the business's office. C. A claim for damage to personal property resulting from employee negligence. D. A claim for defamation resulting from a company's advertising. Answer: A. A lawsuit arising from a car accident involving an employee driving a company vehicle. Explanation: an umbrella liability policy provides additional coverage beyond the limits of underlying policies like auto insurance, general liability, and employer's liability. It typically extends coverage for lawsuits or claims that exceed the limits of the primary policies, such as in the case of a car accident involving an employee. Question 28. Which of the following does NOT typically trigger a business interruption insurance claim? A. A flood that damages the business's property. B. A fire that destroys the business's office building. C. A lawsuit filed against the business for intellectual property theft. D. A tornado that temporarily closes down the business. Answer: C. A lawsuit filed against the business for intellectual property theft. Explanation: business interruption insurance covers loss of income and ongoing expenses due to property damage from covered perils like fire, flooding, or tornadoes. A lawsuit for intellectual property theft would not typically result in a business interruption claim because the business's operations are not directly impacted by the legal proceedings in terms of physical damage to property. Question 29. Scenario-based. Sarah owns a retail store and has a general liability policy. One of her customers trips and falls on a wet floor inside her store, injuring their leg. Which of the following will Sarah's general liability insurance most likely cover? A. The cost of the injured customer's medical bills. B. Damage to the store's property. C. Loss of inventory due to the accident. D. Sarah's personal legal fees. Answer: A. The cost of the injured customer's medical bills. Explanation: general liability insurance covers bodily injury to third parties occurring on the business premises. In this case, Sarah's policy would likely cover the injured customer's medical bills resulting from the fall, as it is a common type of claim covered by general liability insurance. It would not cover damage to property or loss of inventory. Question 30. What is typically the main distinction between a business owner's policy, BOP, and a general liability insurance policy? A. A BOP includes coverage for property damage, while a general liability policy does not. B. A BOP combines coverage for both property damage and general liability risks in one package. C. A BOP only covers personal injury claims, while general liability covers property damage. D. A general liability policy is more comprehensive than a BOP. Answer: B. A BOP combines coverage for both property damage and general liability risks in one package. Explanation: a business owner's policy, BOP, combines general liability insurance with commercial property insurance into one package, making it a convenient option for small and medium-sized businesses. A general liability policy, on the other hand, only covers liability risks and does not include property damage coverage.